Hi everyone, this is Slime T Investments, and we are continuing with our series of showing you how to trade and how we trade or how we take our trades on synthetic indices. I would like just to mention before we go into what we are doing or today's video that we will be using the simplest terminologies, the simplest words just for understanding the basics of how we do or how we get our strategies, saving the big terminologies or the bigger concepts for what we sell for mentorship, for what or who we offer mentorship to. So I'll be using quite simple words for everyone to understand how we trade these. Today we're going to start with a follow-up on the previous video, the last video that we did, which was on the index volatility 25. So in here, this is going to be just a small thing. We shared an analysis where we were expecting price to sell from here, and indeed we did drop from that point. But our target was somewhere here because we thought because of this break of structure, we're going to have price going up to this level. So now that price broke structure here, we believe this is the next level where we should take ourselves, because breaking structure here means that we're still continuing going down from how we trade. So these are just results of what we anticipated in the previous video. You can go watch it to see how we got to understand that price will sell from this point going down and why we were expecting it to come to this level and then continue up. In today's video, we're going to look at volatility 10. So let's go to it. So in here, you guys can see we were trying to analyze this with one of our clients today. Oh, and we're taking off. Okay, so what happened is, okay, let's start off from scratch. Yeah. So the idea is still the same. We want to see price continuing in a certain direction, going up or going down. And then this, it's done by movements like this, because we all know how price moves. It goes up and down, creating higher highs and higher lows, higher highs and lower, a lower high, something like that. Yeah. So we want to see this happening without price breaking either this low for an uptrend, creating another one and not breaking it, but breaking the previous highs, continuing up, breaking this one if they're going to continue up, and then come back. Without breaking this one, they should break this one and continue up. So should they break this one, should they break this low, we are now anticipating or know that price has now changed direction. The trend is now going to be going down, but from these levels here, continuing down like that. Once we break this, we continue down, joining everything like that. Once we break this, we go up to certain levels, and then we take trades going down. So this is all we are looking for. This is the only thing that we are looking for when trading our synthetic indices. And I want everyone to understand that this one move could be a move in a 4-hour chart, and then this be a move in 15 minutes or 30 minutes or whatever smaller time frame to the 4-hour. So we are now going to look at this index here, noting that and taking into consideration that price has been going up. Price has been going up with the trend without taking out these lows like I was showing you guys. So, but after respecting this low, we take out the highs. We came back, respected this one. We took out this high. Again, with this low, we took out this high. Then we created another high here. So should we break this high anyhow from here? If it happens that we take out this high, then we expect price not to take out this low, but drop into the order blocks here and continue up, take out this low, drop again and not take out this low, but take out this high. So that's what we are anticipating. But everything that we are anticipating follows price structure from now at this point that I've circled here. So whatever that's happening here, being based on what happened down here, is going to tell us if we are going to break this one or we are going to break this one. So our focus now is here. Just here. Whether we are breaking above here, we are going above this high, or we're going to go below this low. And everything that we'll be looking at in here is based on market structure, which is just this, or going down. That's all we're looking at. So let's go into a smaller time frame to look at what happened here. Now, one thing that I want you guys to remember is that whenever price goes to break a high like this, it's because there was an order block that caused the price to go up there. So there's an order block that causes that move. So price broke this high, came back to mitigate an order block here. So should we break this move, this high now? Should we break this high? This high? Then we'll come back into an order block around here in this move that will have broken that high. So we should come back to tap and mitigate that order block for us to continue. So meaning that if we take a trade here and then it breaks this high, the previous high, it means that our next buy trade will be taken exactly here, which is where inside the order block. You all understand, I believe. So let's go into the smaller time frame to see what's going on here. So this is our 30-minute chart. Inside it, we saw price breaking the previous high, coming back into the order block, mitigating it, and we now believe that we are going up. Now, on our way up, we are supposed to create structure as well, We are supposed to create structure as well. And we do see price creating the structure in this format. Oh, okay, well, price dropped into the order block. It dropped into this order block with structure like this. Then we tapped into the order block, broke structure again, then tapped again into the order block. Now, when we took out this structure here, we tapped into an order block here, and then we continued going up with it. So I want everyone to realize that price is now going up with this structure. Went up. Now we are here into an order block around here. So we are going up. Might be to this high, might be to take out this one, or even this one. But what we are looking at now is price moving from this zone because of an order block here, because it had broken this high. So So what I'm trying to say is that we had a break. After this break, we expected price to drop into an order block, and then yes, it did, creating this low. We had this high again, which was broken or taken out. So price should come into an order block around here for us to take our trade. So we are in this trade now because of this order block. Our first target is this one, our second target is this, then our third is this one. You understand? Everything that is happening here is just focused on what? Market structure. So let's zoom into the structure to see exactly where the order block is, how it was mitigated. So clear. We had this high, like I said, and price tapped into the order block here. And it's now going up. So it's clear. We are all supposed to take our trade here with the target being, the first target being here, because we still had structure going down. From here, we had our highs and lows, which were broken and those which were respected. But it was all such that we tap into this order block and continue up. So this was a simple trade, guys. And everyone, I believe, would have seen this one, basing their view on the market structure. So we'll see how far it goes. But the idea for us here is for this to break this high. This is the wish for us, to take out this high, and then we see what happens. So yeah, this is it, guys. This is Lime T Investments. Please like and subscribe. Also share the videos with anyone that would like us to help them with anything. Also comment on where you're not understanding. I'll also share our, or I've also shared our contact on the description. So cheers, guys. We'll also continue sharing the videos with you on how to trade your synthetic indices, how to trade your Nasdaq. We'll be doing that in the near future.